Hey everybody, welcome to my channel. My name is Justin. Thank you so much for joining me today. Today I want to talk about several stocks I'm looking to buy March 2021. So in this video, I'm going to go through each one of those. I'm going to tell you exactly what the buy points are for each of the stocks I'm looking into. So stick around. Hey everybody, welcome back. The goal of this channel is to help you achieve financial freedom by investing in your future and investing in yourself. On this channel, I go over the stocks I'm buying, I'm selling. I'm also doing deep dive analysis on other stocks, when I'm looking to buy, or even what my subscribers have asked me to look into, like several I've done over the last 2 weeks. And I'm a long-term investor, so stocks I'm looking to buy, I don't mind holding them 5+ years into the future. So let's get started. The first stock I want to talk about today is Dropbox, ticker symbol DBX. This is actually my number one position in my portfolio right now. It takes up about 15% of my portfolio, and I have no problem making this 20 to 25% of my portfolio, no problem at all. This is a company, in my personal opinion, that is extremely undervalued, and they're mostly known for their storage of online files, but they also have HelloSign that's really not even baked into the price point at all. And actually, out of their segments of revenue, that's actually the largest per percentage-wise quarter after quarter right now. Not only that, but they announced in this last quarter that they're going to do about $1 billion of buybacks. And keep in mind, this company's worth $10 billion. That's what their market cap is. So they're buying back 10% of their total company over the next year, which is unbelievable. Not only that, but they announced just here in the last week that they're doing $1.3 billion of convertible bonds that mature out to 2026 to 2028. I'll be doing a video just on that and how excited I'm about them doing that, and how bullish that company must think they are going out into the future for doing all that. And right now their growth is looking at between 15 and 20% per year over the next 5 years. And right now, the way they're priced at really no growth at all. Their 4 P is around 23, 24. And keep in mind, their same sector, I mean, it's almost like double that, a lot of the companies that are out there. So they're extremely cheap, in my personal opinion. And my cost basis on the company is around 22. I think anything under $25 right now is a buy. And I'll be looking to actually buy all the way up to $25 in my personal opinion. And I'm just so excited on where this company is going. All right, so the second company I want to talk about is Oracle, ticker symbol ORCL. And I actually have a full video on that company here in the last week, why I think they're so undervalued. I also have a video on Dropbox as well, so I'll put both of those in the comment section if you want to go take a look at those videos. But Oracle is obviously a software company. They've been kind of left for dead. I mean, they've had virtually no growth for like 10 years. It's been pretty much non-existent out there, but the company is pivoting and transitioning and completely changing the way they're doing business, and they're really going to cloud-based software. And on this last earnings call, the leadership team came out and said that Oracle is going to be known as a cloud-based company, similar to like Google or Microsoft or Amazon. I mean, Oracle is not going to probably beat out those companies as far as cloud-based companies go, but they'll definitely be right behind them. And their revenues are really, really good growth because of that. And they also announced that they have several big players that are transitioning from SAP to Oracle, and SAP is their largest competitor. They couldn't come out and say what companies they were yet, but for them to just say that, I believe them, and I'm excited to see who those are. Now, we know one company, and that's Zoom Media, and obviously that's a very large company that's out there that's growing like crazy. But this company is really poised to have some significant growth, 10%, 15% per year into the future, and they're priced right now to have absolutely no growth at all, and they're trading around like $4 a share right now. I think anything under like $65 a share is a really, really good buy on this company. I think they're going to surprise a lot of people over the next 3 to 4 years. All right, so the third company I want to talk about is no surprise this channel, but it's Huntington Ingalls, ticker symbol HII. This is actually my third largest position in my portfolio right now, and this is a company that is incredibly well run. They had some issues last year with attendance because of the whole Rona situation. It delayed their business. So they're actually a manufacturer and builder of warships for the U.S. Navy. In fact, they're the only ones that make aircraft carriers for the U.S. Navy, and they're only one of two companies that actually make submarines for the U.S. Navy. So they have a monopoly and a duopoly. So you can't get a better moat than that just in general. And their stock went from $280 a share down to $140 a share. Recently, it's been trading around $180 a share. And this is a company that historically has profit margins around 8%. And they fell a little bit last year because of attendance issues. But in the fourth quarter this past year, they had 11% operating margin. So they are right back on track. What's hurting them right now is they only have one ship that is scheduled to be delivered in 2021, but they have three ships that are supposed to be delivered in 2022. So I expect sometime this year their price to really start picking up as far as stock price goes. And not only that, but they had stopped share buybacks. They just announced in the fourth quarter that they're going to start doing share buybacks in Q1 2021. So don't be surprised after their first earning call of 2021 that this stock price really starts shooting up just in general. Not only that, but they're just a great dividend payer in general. They're paying out, I think, $1.14 per share in March, and they've had a 20% increase per year going back the last 3 years. And this is a company historically that has put 97% of their free cash flow back to the shareholders. So I expect big things for this company. And I think anything under $175 per share is a good deal. And my cost basis is around $157. But anything under $175 is a really good deal for this company. All right, so the fourth company I want to talk about right now is Facebook, ticker symbol FB. And this is a stock that I actually own in my portfolio. It's one of my smaller positions. And in fact, one time, actually for, I would say about a year and a half, it was my number one position in my portfolio. And I got to be over $300, and I sold quite a bit of my shares at that time. I just felt like the tech industry in general was going to have a big pullback, and they have. So I'm actually starting to look to buy this company again. My personal, viewpoint is anything under like $250 a share is a really good deal for Facebook, and I think they're trading at like $257. And keep in mind, I mean, they were at, I think, $305, $310, something like that, just a couple of months ago. And this is a really unique company. To me, they're kind of like Dropbox, where they have a really good valuation right now, but they have just so much growth expected for them out into the future. So they're expected to have about a 20% clip per year in growth going out over the next 5 years. And this is a company that owns Facebook, Instagram. They have several billion users across the whole globe for Instagram and Facebook. And they're just a social media giant, and there's just so much more room to grow, just not in Facebook. I mean, they have like the Facebook shops that are growing. They're starting to do more work with Shopify. I mean, they have so much that they can do, and this is a company that's run by obviously Mark Zuckerberg that just continues to innovate, continues to grow, and he has no problem just going into new areas and trying new things. And Libra obviously has not worked out for him, but I would not be surprised here in the next year they have something new that they come up with, and they're just going to continue to grow. The issue with them is just the regulation issues. They're constantly in the media, they're constantly government going after them. They want to break them up into different entities, but that hasn't happened, and they just keep going forward. And their balance sheet is just unbelievable. They have over $50 billion in cash, no debt whatsoever. They're just phenomenal. They're just swimming in cash right now. And this is also a company that just downplays everything. They come out and they smash numbers quarter after quarter, and then they just say, oh, you know what, next quarter is not going to be as bad. They just downplay it. So their stock just really hasn't gone up, like it really should. But this is a solid company, and I have no problem holding them, 5+ years into the future at all. So anything under 250 is a good buy point in my personal opinion. All right, the fifth and final company I want to talk about on this video is Berkshire Hathaway, ticker symbol BRH. ORCL. This is obviously a company that's well known. It's run by Warren Buffett and Charlie Munger. And really, over the last 10 years, they really haven't done well. In fact, they've underperformed the market just in general, which is not something that Warren Buffett is used to. I mean, historically, his company has 20% plus returns. I mean, they've doubled what the S&P 500 has done. But a lot of the reasons why they haven't outperformed the market over the last 10 years is they just have so much cash. I mean, they have well over $100 billion of cash on their books, and they really haven't gone out and bought a lot. Here in the last quarter, we found out that they bought Verizon and a couple other companies, but in general, they just allowed their cash just to keep piling up. So when you're not utilizing your cash, it's hard to get the returns that the market is doing. I mean, the S&P 500 was holding 15, 20% of cash or whatever. Obviously, the S&P 500 wouldn't have the returns that it has. Now, things are starting to change for Berkshire Hathaway. They just had their fourth quarter 2020 earnings here in the last day, and they beat expectations by 42%, which is phenomenal. In fact, they haven't beaten expectations in the last 3 quarters previous to that. So it's nice to see that they had a big uptick and beat. And this is a company that, if you want to own just one company in the market, my personal opinion would be Berkshire Hathaway, because they own so many different companies. I mean, they own like 50 plus companies, from See's Candy to Dairy Queen. Not only that, but they have a huge portfolio of funds where they own actually 5% of Apple, believe it or not now. They own Verizon, they own Bank of America, they own Moody's, they own so many different companies. So they're so diverse. So they own a bunch of companies, but then they have a portfolio where they've invested in a lot of companies as well. So they're just diverse across the board. And this is, I think, going into the future, Warren Buffett is going to start using more of his cash. And, a lot of people are saying, hey, he's lost it. He's not up to speed on things. And I don't think that's the case at all. I mean, he's looking at, the Wilshire GDP, for example, that is showing this market is like two times what it should be as far as how much it should be worth right now. And so I do think he's going to start using his cash more going out into the future. I don't think he's lost it. He still will only buy companies in a circle of competence, which is okay, whether it's financial or whatever. But he's gone out and he's bought Apple and other things, but he has 2 lieutenants that are under him right now that are basically in training that he'll probably turn Berkshire over to once he steps away or passes on. So I think Berkshire is in a really good space right now. In fact, I even go to say when Warren Buffett does pass the reins on, Berkshire actually may even do even better going out to the future. But the valuation right now on this company looks so good. I mean, they're trading the 240s right now, and honestly, anything under like 230, in my opinion, is a really, really good buy for this company. They just look so dirt cheap going out into the future, and I think that they're going to beat the S&P 500 pretty easily over the next several years. And this is a one company, if I had to buy and just hold forever and not sell, it'd be Berkshire Hathaway, because they're just so diverse just in general. Not only that, but I mean, they came out and they announced in the last quarter that they bought back like 5% of their shares in 2020. So I expect that to continue going out into the future. And that shows you how much Berkshire thinks of how low their price is of their stock right now. And this is a company that's never really done dividends. They've always felt that they can actually execute with their money better than maybe what the shareholders could, whether it's buying back shares of their company or unleashing their money and going buying companies or investing in companies or whatever. But I still believe in Warren Buffett, Charlie Munger, and the 2 lieutenants that they have under them. So I'm excited about this company going forward. I have no problem holding them and buying more into them. So those are the 5 stocks I'm looking to buy in March 2021. I would love to hear from you guys. I mean, what do you think about these 5 companies? What companies are you guys looking into? I learned so much from you guys. So hit me up in the comment section what companies you're buying into. I love to take a look at those. I like doing more research too. So thanks so much for watching. You got some value out of this, hit that thumbs up button. It really helps out the channel a lot. I personally appreciate it. And I'll catch you guys on the other side. God bless. Take care.